Hello everyone, this is Dan Hussey with RJO Futures bringing you our strategy of the day update for the agricultural markets, sectoring in on grains now. We're going to begin with wheat and take a look at what Chicago wheat is doing. This is our continuous contract of March wheat. I want to begin by pointing out and taking a look at the trendline resistance that the market has found on every rally since the midsummer, and I also want to take a look and discuss a potential structure here of what could be referred to in at least an Elliott wave as an ending diagonal. The idea is that it comes towards the end of a move, and in this case we see kind of a compressing diagonal that pushes down into very major and rather historic lows for wheat. At this point in time, we're going to be looking for an extension as a downside target for this market, and actually we want to see wheat stay above 370. So if we get below the 370 handle, or the 370 area I should say, we've actually invalidated this type of structure. This structure is also looking for a burst down to test trendline support, which at this point in time comes in at the 390 area, and maybe even a little lower towards 370. So anywhere between into new lows and down towards the 370 area could be a bottoming area and a support level coming from this ending diagonal structure. Now, an important thing to note is that if this does end up playing out for wheat, we would actually be looking for upside that would retrace the entire body of this structure and maybe even retest towards highs that the highs before this structure began. So it at least would look for a test of the 485 area. And the nice thing is that we don't have to do anything with this type of trade yet. We want to actually see it burst lower. Then we want to see it snap back and break above the trendline resistance. And then at that point, we may have a confirmation of a buy signal for a dip to buy on a move back higher. So there's still some price action we need to see play out. We want to see it push a little bit lower here into new lows, and then have a very quick and rapid snapback that may give us only one opportunity to really get in. But it's something to watch for, and will be kind of the game plan going forward. So very likely going to be in striking distance here and trying to take out a prior lows here and head into new contract lows below 393. So beans, on the other hand, soybeans here, kind of in the near term, also looking at a daily continuation chart of the March contract, found resistance on a rally here up into that 1072 area. And actually, if we were to measure out both equal eggs and full 50% levels here, you can see how there was a bit of an overlap and confluence of that area in the 1060 to 1070 area. It didn't quite make it into 1070s, and the market has fallen off a little bit here. But we have effectively, and this is where now if we actually dial down to a 240-minute chart, we can actually take a look at the potential support that beans have found. And let's take a look at Fibonacci retracements here of now the three-wave, or the move up off of our 944 lows from October, or I'm sorry, late September there, up to the highs in late November, up into the 1066 highs. A full 50% retracement is being tested right now into the 10 handle. That's that 1000 area. And we are going to be looking for support also coming from, if you want to look at this as maybe three waves down, you can see how there's an overlap of also the 100% or equal eggs into that area too. So potential support for beans. Could we see a reaction off this level that takes us back to, put pressure on resistance? I see two very technical levels, both kind of an area where shorts have participated, but up at the 1066 area, and then now I see an area where longs might participate into this into the 1,000 area. And I want to note that if we push below, the 1,000 and break below trendline support here, we've got a pretty good indication of, a technical area that could confirm a break and maybe even continuation lower to a retest of prior lows. So this 990 area, if we do head lower in beans and test down below that 6218 line and break this trendline support, it could be a good indication that the market wants to actually head lower in the near term. Okay. All right, and now last but not least here, let's take a look at corn. We have the March contract for corn up, a daily continuation chart as well. Fibonacci retracements here. If we take a look from our September or late August lows to the highs after in late October, a full 50% retracement has been the support zone that the market has found into the 346 area. Now, the big question is, what has it done since then? Well, we really do have a range-bound market here, as we seem to be putting up a fight between prior highs and that 50% level. So maybe an extended period of sideways price action for corn here into the near future as it tries to define its trend. The market has found basically prior support as resistance into that 370 area that I mentioned, or that is very similar, I should say, to the area that we found in, I believe in beans, it was, we found a prior support acting as resistance. And again, so as corn came down into that area, it originally found it as support. And then when it broke through it, we actually started to find those prior lows now as resistance, and now we're testing them yet again. So so a nice technical chart here, but might be looking for a little bit more sideways price action. And of course, if wheat's going to be testing into new lows and beans have both sides of the equation kind of at play, there's definitely a notion of a lack of clear trend or direction in the agricultural markets. And that is what is causing a lot of the sideways price action we've had since October. I think there's been generally an argument over the USDA consensus for yields, as yields are incredibly impressive. But then we're also seeing news, China talking about not wanting to buy beans, the strong U.S. dollar being a deterrent to buy U.S. crops, and then, But to round that kind of off, you're also seeing China come in and actually still being a buyer. So if exports can pick up here, we do have a little bit to go to get above pace, and generally speaking, over the long term, we should be making somewhat of historic lows in the grain markets, and that's a big long-term picture. And this bottoming process isn't going to be quick, and as I'm sure many of you have by now noticed, that it's going to take time, patience, and timing will be of the utmost importance going into the future. So a little bit sideways here on corn. Beans, we can make a case for both sides getting reactions, and wheat, pretty clear indication that they want to try to test new prior lows, might have a reversal structure in play, and we do have some things to watch going into the new year. So with that being said, have a great day, everybody, and I'll be back with you as price action develops. Take care, everyone.